Hello, I'm Pete Nicholson. I'm the Chief Fiduciary Officer from First National Wealth Management. Today, we're going to discuss today's market environment and provide you with some tips to help you sidestep volatility. As a stock investor, it's inevitable that you're going to face some volatility. And unfortunately, this is part of the investing process and causes a lot of anxiety, especially if there's uncertainty. Here are a few considerations to help you through the difficult period that we're in currently. Number one, we need to maintain a long-term focus. Remember that investing is a process over a long period of time and not just about a moment in time. It's not about a day, a month, or even 6 months. It's really about a long-term focus. The silver lining is that a sell-off, they occur relatively quickly and markets usually resume their uptrend. In addition, history has shown us that when volatility is extremely high, like it is today, markets usually perform quite well a year after the fact. Number two, we need to avoid some of the investment pitfalls that are going to prevent you from reaching your long-term aspirations. It's easy to buy when the market's performing well. Conversely, it's easy to sell when the markets are down. So don't let emotions get in the way of that, get in the way of a solid plan, because you could potentially end up turning what's now unrealized into a realized paper loss if you lock in losses today. Remember the reasons for owning stocks in the first place. If your plan requires you to own stocks, if your plan requires you to earn 6% a year, for example, you need to abide by the plan. You need to continue to stay on track and on plan. So continue to maintain a long-term focus. Number three, maintain diversity. Maintaining diversification will help you smooth out the ride and smooth out the day-to-day fluctuations. Investing in different asset classes that do not move in tandem allow you to smooth out the ride. This is an environment in which international investments, for example, are actually outperforming US investments. So in addition to owning United States large, mid, small size companies, make sure the portfolio has international and emerging markets to help you provide growth opportunities as well as reduce risk. In addition, make sure you continue to invest in style diversification. Make sure you've got growth in the portfolio as well as value. Portfolios are performing better than expected this year because the value side of the portfolio is performing better. Make sure we revisit your asset allocation. Now is a good time to revisit that. Unfortunately, it takes a downturn to realize what asset allocation is appropriate for you. There could be a difference between the asset allocation you need to have versus what allocation you're actually comfortable with. So there needs to be a balance there. And make sure we continue to rebalance it periodically. This is a way to help us reduce risk and also provide you with attractive growth opportunities long-term. Consider a bucket approach. This is a good way to help you focus on your long-term investments while continuing to maintain your short-term investments. And that means keeping all of your short-term assets. This is monies that you will need within a year in checking accounts, CDs, and money market assets. Assets that you need to hold intermediate term between 1 and 5 years should be invested in fixed income investments, mutual funds that are focused on bonds, as well as CDs. And last, long-term bucket, anything longer than 5 years. This is your stock bucket. Make sure you leave that one alone. That may have both stock and bond components, but continue to focus on the short-term investments while leaving the long-term one alone. If you have concerns or need to talk about the current environment or your portfolio, please make sure you contact your portfolio manager at First National Wealth Management.